I want to show you some things that people are doing right now based on the bank's math. Here's some things you never do. Okay. Number one, never get anything less than a 30-year mortgage. Not when you understand the P.I.L.L method. Never get a 15, never get a 10, not even a 25. Get a 30. And did you know there are some banks that are actually offering 40-year loans? The higher the term, the more years you get the mortgage for, okay, the more options it gives you to pay off the loan early. And a 30-year and a 40-year mortgage still pays off in about 7 years. How about that? Okay, so why get a 15 when I can get a 30 and be done in 7 on average? I just don't do it. So the other thing you don't do, never put a large down payment on a loan. So let's say this couple had this $200,000 mortgage and they said, you know what? We would much rather have a $150,000 mortgage. We got an extra 50 grand. Let's put it down as a down payment. Let me show you that you never do that either. Because of the bank's math, this is what it does to us. So I'm going to put another $150,000 mortgage in here, $150,000 at 6%. And our payment because of that is $899.33 because they paid an extra $50,000. They paid that to the mortgage, a big down payment. And instead of $231,000 in interest to pay over 30 years, they have $173,000. All right, let's bring up our calculator back on the screen. Okay, put our calculator back on the screen. And by putting that $50,000 down, let's see what our savings is going to be. So we're going to put in the $231,000. Okay, this is more bank math, folks. More bank math. $231,676. And we're going to subtract $173,173, $758, $758.80. Okay, so we could save $57,917. If we prepay, if we make it as a down payment, we save $57,000 over 30 years. You have to keep the loan 30 years to realize this $57,917.20 worth of savings. You got to keep it 30 years to realize that. But let me show you something instead. Instead of taking that $50,000 and making a down payment, get the $200,000 loan. I need you to focus here on cumulative principal and cumulative interest. And I'm going to get ready to show you, take the $200,000 mortgage, instead of making a down payment, close on this loan. If you had the choice between the two, a down payment, now you still have your $50,000. What if you added that 50 grand to your first payment on this loan? Make your first payment and then add the $50,000. Not before, but after you close on the loan. Watch what happens when I go down cumulative principal to $50,000. Watch this. I'm looking. And we finally, there we go. $50,000 prepaid. We just knocked off 164 payments we never have to make. All right, let me get my calculator back on the screen. 164 payments we never have to make. Divide that by 12. We just eliminated over 13 and a half years off a 30-year note in just 1 month by taking the $50,000, and instead of making a down payment, we made a prepayment with the same $50,000 and knocked off over 13 and a half years. And let me see here, 50,000 and saved ourselves $145,000 in interest in 1 month. 145 grand in 1 month, taking the same amount of money and making a prepayment instead of a down payment. Brian said, that's insane. I know. Let's see. Cassandra Creech online, she's watching us on YouTube. Okay. Here's what she's saying. What has been the reaction from the banking and finance community to your system. There's over 100 million mortgages out there, Cassandra. Over 100 million. In the 16 years that we've been in business, that this whole system has been out there, we've been able to help maybe a little over 1 million people. And there's over 100 million people out there with mortgages. We're not even a pimple on their behind. But those million people are saving a lot of money. So the question has to become, do you want to be part of the 100 million or do you want to be part of the 1 million that's saving money? So we're trying our best to get the information out there so we can listen. We can use your help. How would you like to be able to help us to get the message out? Share the room and share these videos. Share the videos with your family and friends. Okay, go online and share. You can be part of the solution so that we can help more people. The banks don't even notice what we're doing. They're making so much money. But thank you for asking, Cassandra. They don't care. Besides that, do you realize what banks are doing every 5 to 7 years anyway? Even your own bank? They want you to refinance every 5 to 7 years. Do you know what has to happen to refinance you? They have to pay off the old mortgage. Even your own bank will offer you a lower interest rate or opportunity to refinance to pay off some, high interest debt or whatever. They're going to offer you a refinance. Even though they have you locked in at a higher interest rate, they're going to offer that to you every 5 to 7 years, even your own bank. And what they have to do is pay off the old loan to give you a new one. They're already used to paying off loans every 5 to 7 years already. We're just doing it in a way that benefits you now. Thank you very much for asking that question.
But Don has some valuable information that can contribute to the quality of a person's life. And it only costs you a few dollars. It's his book. Why not get that?
I'm going to go through the P.I.L.L method myself with some of my investment properties. So I'm going to link up with Don, and then I'm going to sit down with him, show him my investment portfolio, and see how I can eliminate interest.